Well, 16 was challenging, much more than we saw in 2015. I think that the good news is that the benefits of our diversified business mix, both geographically and in terms of activities, has contributed once again to manage this environment. I think the investor confidence is there. We are talking regularly to clients and investors about that, and we do see readiness and planning for investments in not only potentially in financial markets, but also in the underlying businesses. But it's quite clear that investors are looking for concrete actions by the new U.S. administrations in order to then go into investment mode. Have
they physically changed and moved to transaction mode since the election? Have they shown you the money, to coin a phrase?
Not really in a meaningful way. You do see, particularly in the U.S., a little bit of better momentum, although I have to say that the fourth quarter was, in the U.S., a positive one, post-elections. But if you look in general outside the U.S., I think the situation hasn't really changed a lot, and also for good fundamental reason. If you look at the situation in Europe in general, particularly on the political side, and also in Asia, there is still room for improvements.
Let's talk about the outflows. We've had outflows across Wealth Management America, net new money outflows, and in the asset management. Are we seeing the end of these, I suppose, regularization for the clients? Is this the end of those cross-border outflows, Sergio?
No. I think that what we saw in Q4 this year was an acceleration of a process of regularization that will be going through as the automatic exchange of information is applied globally. And what we see is clearly now a phase where emerging markets, particularly emerging markets, and in some Asian markets, this is now executed. We do expect similar outflows that we saw in 16 for this year. We do see a little bit of tapering in 18.
Let's talk about the investment bank. You went fixed income light. Many people thought that this would be an incredibly tough quarter for you. I look at the numbers. There's a significant beat on what the market had penciled in for you. Talk me through what the success was in an equity-heavy investment bank.
Well, the success is, indeed, in equity. I think that the investments we have been making in the last couple of years to rebalance our business mix a little bit more towards the U.S. Is paying off. I think that if you look at our U.S. businesses in general, but in particular in equities, we have been having a strong performance. And when you look at also a little bit more activity on the derivative side, has also helped to sustain this business.
Everybody's looking at America. Your chairman, Axel Weber, hinted that there could be deals in the offing for UBS, that you may look at M&A. Will you scale up in the United States of America on wealth management and on the IB? When would you be convinced to shift gears in what you do in the USA?
No, I think that we are already very convinced in what we do in the USA. Look, for example, in our wealth management business in 2010, we were losing 150 million pre-tax. This last year, we posted $1.25 billion of pre-tax profits in the U.S. So the momentum in the U.S. from an organic standpoint is still very good. We are very focused on growing organically, but of course, as I mentioned in the past few times, the time of consolidation in our industry is clearly starting, and it's almost inevitable to address both overcapacity and, in some cases, profitability issues.
When you sit with the board, do you say that you want to be one of the players in that consolidation?
Consolidation is one option, is not the option, and we have to always look at what fits into our strategy. We have a clear strategy, and we don't want to really dilute our strategy just for the sake of consolidating. There has to be merits, strategic and financial merits in doing that, and so we are open to exploit any option that makes sense and accrue values for our shareholders.